Gold opened February around $4,900 per ounce and closed the month strong at approximately $5,278 per oz on February 27th, up roughly 7 to 8% from the start of the month. Prices dipped to lows near $4,400 early February, then rallied hard mid-month, breaking $5,100 resistance, testing $5,300 highs late February. Classic safe haven strength amid geopolitics and macro uncertainty. But March 1st hits, and gold's already jumping to $5,290 plus today. With Iran/US tensions flaring, tariffs looming. Is $6,000 coming? Full March prediction next. This week, geopolitical tensions in the Middle East escalated sharply, with global markets reacting to a series of dramatic developments. Negotiations aimed at addressing Iran's nuclear program, including talks involving the United States and Iran in Geneva, failed to yield results, and diplomatic efforts have stalled completely. No breakthrough agreement was reached on key nuclear and security concerns. Following the breakdown in talks, the United States and Israel launched coordinated military strikes against targets in Iran on February 28, 2026. Explosions were reported in Tehran and other cities, and several strategic sites were hit. Iran's leadership and military infrastructure were among the reported targets. In the hours that followed, Iranian forces responded with missile and drone strikes directed at U.S. military assets and other regional targets. Explosions and air defense activity were reported across multiple countries in the Gulf and in parts of Israel as Iran carried out its counterattacks. Several Gulf states, including United Arab Emirates, Bahrain, Kuwait, and Qatar, reported impacts or temporarily closed airspace amid the exchanges. Iran also took action to influence maritime routes. Communications from Iranian Revolutionary Guard forces warned that ships would not be allowed to pass through the Strait of Hormuz, a key choke point through which an estimated 1/5 of global oil trade normally flows. Major shipping companies responded by suspending some transit through the Gulf and rerouting vessels, citing safety concerns amid the rising hostilities. Markets reacted immediately to the surge in geopolitical risk. Safe haven assets gained. Gold prices rose sharply, reaching one-month highs with intraday peaks above $5,300 per ounce. This reflects investor demand for assets perceived as less risky during times of uncertainty. Oil and energy markets also moved. The potential disruption to the Strait of Hormuz raised concerns about global energy supplies, contributing to volatility in crude oil prices and shipping markets. Trump's trade war just leveled up. Again, after the Supreme Court smacked down his big emergency tariffs on February 20th, he fired back with a brand new global hit. Let's break it down fast because this is fueling gold's surge right now. The Supreme Court ruled that Trump couldn't use emergency powers for sweeping tariffs. But Trump didn't back down. He invoked Section 122 of the 1974 Trade Act. The same day, this lets him slap a temporary surcharge on all imports to fix fundamental international payment problems like trade deficits. Started at 10% across the board, effective February 24th for up to 150 days. Then he signaled possibly hiking it to the max 15% where it makes sense. These tariffs mean higher costs on imports, potential inflation spike, delayed Fed rate cuts. Plus, dollar gets shaky from global pushback and uncertainty. Result? Investors flock to safe haven gold as an inflation hedge and dollar alternative. Gold's been grinding higher all week, steady gains, then acceleration today. This uncertainty is rocket fuel for gold. Last week, the U.S. Bureau of Labor Statistics released the Producer Price Index, PPI, for January 2026. This measures changes in prices that producers receive for their goods and services. The headline PPI rose 0.5% from December, seasonally adjusted, compared to forecasts around 0.3%. Core PPI, which leaves out food and energy, increased 0.8%. Over the past year, headline PPI was up 2.9%, and core was up 3.6%. After the release, market expectations for Federal Reserve rate cuts shifted. The chance of a cut in March became very low, and many now think the Fed may hold rates steady longer, possibly into June or beyond. This keeps borrowing costs higher for a bit longer. When inflation data shows prices staying firm, and rate cuts look further away, gold can benefit as a hedge. People often turn to it when there's uncertainty about rising costs or economic policy. Could gold test 5,450-500 on the short term, and push to 6,000 by the end of 2026? Or it may happen earlier. Let's keep monitoring. Don't forget to like and subscribe for more information.